Hello and welcome to cmsfx Daily Video Recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, August 19, 2010. Let's start with some fundamental data out of the US, which had a big impact on equity markets as well as currency markets. First up, jobless claims for the week ending August 14th. We saw them rise by 12,000 to 500,000, which is the highest level in 9 months and a distressing sign for an already weak US labor market. The 4-week moving average also hit its highest level since December of 2009. Looking at the chart, we're seeing this ugly turn upward in terms of jobless claims, and we've broken out of our recent sideways readings in this indicator. As I had mentioned last week, this could be a bad omen or precursor to a double-dip recession in the US. If that wasn't bad already, the Philly Fed Manufacturing Index turned negative in August, posting a reading of negative 7.7 from 5.1 in July and 8.0 in June. A reading in negative territory for this index signifies a contraction in activity. The result was strikingly weaker than consensus estimates, which saw the index coming in at 7.0. Because the Philly Fed Index arrives early in the data cycle, this result is likely to encourage speculation that the US indeed is heading towards a second double-dip recession. In the third release, the index of leading U.S. economic indicators rose less than expected in July, climbing 0.1%. That follows a 0.3% decline in June. The July data, while not pointing to a recession, does point to a very slow expansion. Altogether, today's news sent stocks in the U.S. reeling. The Dow Jones Index was down 190 points by midday, or down 1.8%, while the Nasdaq and S&P 500 were both off around 2%. Let's turn to some market highlights. First up, the dollar-yen pair, and we see that the dollar was already stumbling overnight against the yen after testing a downward sloping trend line, though this isn't the best trend line considering we did break above it in late last week's trading. Nevertheless, we did test it at 85.90 and it acted as resistance, and we picked up speed in the decline in this pair around the open of the New York session as we had the weak jobless claims data and then the Philly Fed data come on top of that, as well as the open to US equities, which saw a very sharp decline. So we actually slipped below a very important level, the 85 level, for a brief time. Though we did find support there, and the greenback has managed to rally somewhat as in the late New York morning trading. All in all, though, we did see an increase in volatility in today's session, following 2 sessions of tight range and consolidation. So first breaking out to the upside, but now breaking out to the downside as well. And overall, today's data does point to greenback weakness against its major rivals, though general risk aversion as well, which could hurt currencies tied to commodities linked to global growth. Speaking of such a currency, we look at the US dollar Canadian dollar, and we see we had a very strong reaction in today's New York session. First, we hit support around 1.0250. If we zoom out a little bit, we could see that this acted as resistance early on in August and then turned to support following its break, and now again it did act as support, and following the increase in risk aversion and falling stocks and weak data from the US, as well as some weaker data from Canada, we saw a very sharp rally, more than 150 pips, as we moved above the 1.04 level briefly in mid-New York trading. There we did find resistance, as we can draw a downward sloping resistance trend line, and that did halt the rally so far. So this does show us that investors were cutting risk and did seek the safety in the US dollar in terms of these currencies tied to global growth. Taking a quick look at that Canadian data, we saw Canadian wholesale sales fall unexpectedly in June, led by weaker sales of machinery, equipment, and supplies. That sales figure dropped by 0.3% when the market had expected sales to rise 0.4%. Also, leading indicators for the month of June was up 0.4%, which was lower than the forecast 0.7%. So in addition to the weak US data pressuring North American stocks, this Canadian data did pressure Canadian stocks as well. Looking at a second commodity currency pair tied to global growth and risk sentiment, the Australian dollar US dollar, we see here too a sharp fall in New York trading on the back of the weaker data and risk aversion as stocks fell sharply. We had noted how this pair had met resistance at the 61.8% retracement of its recent downswing in Tuesday's session around 0.9080, and following that we have continued the dominant move of this downswing. By mid-New York trading, we'd already pushed to our next level of support at 0.89, and following that, we would look to retest the 0.8850 level. So as our two main indicators of risk tolerance and how investors view global growth and risk aversion, Australian dollar, US dollar, both suffered against the greenback. If we take a quick look at the Australian dollar versus the Japanese yen, this is a favorite carry trade pair. It's in a bit of a consolidation pattern, bouncing between a trend line of resistance and support, and currently we do test that support level at near 76. We have broken below this 77.70 level in last week's trading, and it did hold as resistance. So now if we move below this recent support level, that opens the pair to further declines, perhaps testing the 74.50 level, and if beyond that, the 72.70 level. Now that would mean that we would have to see a continuation of risk aversion and fears of global slowdown in growth. Turning back to the US dollar against some of its major rivals, here we're looking at the pound dollar, and we see that overnight the pound gained strongly, though we remain within the trading range we have seen over the last few sessions. Our resistance did hold around 1.56, which also coincided with a 200 period moving average in the 1 hour time frame, and following that test we do see the greenback pairing some of its earlier losses, as we have the fallen stocks, so that's probably sending people towards the safety of the US dollar. Now we didn't manage to actually move below our support at the 1.55 level, so again we remain confined within this trading range, with 157 being our resistance and 155 being our support. The pound did have some nice data come out overnight, so we're about to get into that next. But the question now is if the weak US data will bring the US dollar weakness in perhaps the next trading session, but also next week, or if general risk aversion and concerns about the global economy, which had gripped the markets last week and had sent traders moving in favor of the greenback, will help the US dollar in the following week. So that's the main theme to look out for as we end this week's trading and move into next week's trading. Taking a look at that UK data I had mentioned, UK retail sales jumped 1.1% in July, the most in 5 months, and an index of factory orders, the CBI Industrial Trends orders for the month of August, rose to a 2-year high as the net balance was at negative 14. Also, Britain posted a smaller budget deficit in July, which was better than economists' forecasts, as a stronger economic growth boosted tax receipts. Net borrowing was £3.17 billion, or around $5 billion, less than the £4.8 billion median forecast. Overall, today's batch of UK indicators was positive, pointing to firm consumer demand, falling government borrowing, and higher export orders. So that helped the pound to rally, as we had seen in our market highlight. In our final pair today, the euro dollar, we also saw some similar price action, as first the euro rallied overnight, but then has been giving up those gains in New York trading, as we see risk aversion and the US dollar taking the dominant role right now in the currency markets. Here too we remain within trading range, with 1.29 20 being our resistance and 1.2720 being our support. So no breakouts yet, and overall a bit of a whipsaw session, as first we had the euro gaining, but now the dollar is gaining favor as a safe haven. Now we don't have too much in terms of data coming up to end the week, so we'll see further position squaring, and we'll have to keep looking towards equities in order to see the direction of investor sentiment. However, right now the action is not focused on the European currencies, but is much more focused on the commodity currencies and growth-linked currencies like the Aussie and Canadian dollar. Taking a look at the upcoming fundamental docket, we have just Canadian consumer prices coming out at 7 a.m. tomorrow, and tomorrow afternoon we also have Australians heading to the polls to pick their parliament. And with that, I'll wrap up today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.